Welcome back to Investment Perspectives, everybody. It's another great episode. We have Micky B. Fresh with us today. Micky B., how are you?
I'm doing great, Brad. Great to be back here on a rainy Sunday. This is a
Absolutely.
pre-recorded video.
Absolutely. And to let everybody know, it is a pre-recorded video. We will premiere this week, and we will be able to participate all into the chat and deal with any questions and comments that come through, which has really worked out nice for us. And today we are going to cover a list of things. And among other things, we're going to talk about Miguel Villas and his departure from Ripple. We're going to talk about that company, Algorand, that was acquired by Ripple, and Two Rivers. We're going to talk about Polysign, Standard Trust Company, and that is a next generation of tech. And then we're also going to cover exchanges and the FATF that is coming up in 2 months from now. Micky, how about we start with Miguel Villas?
So, as we all know, Miguel Villas recently left Ripple. So he was head of the liquidity markets, right?
Yes.
So we're all wondering who is going to take over in that role for Miguel Villas. You know, a lot of people talked about Brienne Madigan's now the institutional head of markets. But one thing that I forgot about, and I think many others forgot about as well, was Ripple last year, about the fall time, they acquired Algorand Trading and their entire staff of developers and CTO and executives. I think it was a team about 8 to 10, and they're based in Iceland.
That's correct, yeah.
All right, so I want to pull up so everyone could see here on the screen. Why am I seeing it? Sorry, 1 second.
No, you're fine. And it was funny, too, because I do remember this acquisition of Algorand, and there was an acquisition of something else around that same time period. And it was just very kind of, you know, it happened, it was quiet, and everybody went right back to doing. And I remember they were talking about DeFi a lot at the time, too, and about how they would help with DeFi.
Well, no, Logos is doing DeFi.
Logos, and that was the
Logos is another,
right?
yes, that was a huge acquisition.
That's right.
Both of these came, Ripple kind of like bunched it all into one or two quick insights.
Yep.
And now this guy, Dottie Armanson, so they ran a crypto exchange platform in 30 markets, right?
30 markets.
30 markets. And prior to that, they were a registered SEC securities exchange and crypto broker with Two Rivers Trading, which we're going to look at right now. One second. Okay. Everything's out of order. Hold on. Okay, here we go. Whoops, wrong one. Sorry.
No, it's okay. Believe me.
Tough to find. So this, as they've been in the business with this for like the past 5 or 6 years. So this is one of the things that really it hasn't been made known. No, I'm just trying to find it. Here we go. Got it. Okay. So here we go. Two Rivers was the company prior to Algorand. Now, they were a broker-dealer on the CME and the New York Stock Exchange. They did derivatives, they did cryptocurrencies, and they were a market maker and counter liquidity with institutions and accredited investors. And they also traded traditional markets and provide exchange programmatic liquidity. So these are scientists who are also built algorithm trading platforms.
Right.
So Miguel Villa spent the past 3 years or so bringing in all the um, asset managers, the big custodians, the market makers, the traditional exchanges, everyone we don't know about that's not been disclosed publicly, right?
Right.
Now, these guys are setting up a trading platform. Now, why are they setting up? Why is Ripple setting up a trading platform, right?
Exactly.
Because RippleNet is the trading platform and exchange and order book for ODL.
So let's
And
talk
I just
about
want
that.
to get that.
Yeah, what's the difference about RippleNet here then?
Now, one thing that's different about RippleNet is it's a distributed exchange. So unlike centralized exchanges where all the transactions are done off ledger and controlled by one central authority who custodies the both buyer and seller's assets and manages the platform that they're traded on, where RippleNet is using the Ripple protocol. So the order book that they have is automated through Ripple protocol. So there's no entity controlling it. It's a peer-to-peer exchange.
Right.
So a lot of people know like DEXs. It's similar to that in a way, but Ripple took it to the next level where you've created a entire global network and built basically RippleNet Home, which is all hosted in the cloud. We have all these different servers peer-to-peer able to communicate with each other and disclose price feeds. So basically like the market makers like oracles, and they have an order book in every corridor. So when you're sending an ODL payment to Mexico, MoneyGram isn't looking at the Bitso order book. They're looking at the market makers, RippleNet's order book,
Right.
who happens to have an order in RippleNet order book, but it just happens to process through Bitso's platform. But they're not looking at Bitso's ordering book. They have their own ordering book.
Right.
So I think that's important. And I'm not just pulling this out of my ass. We found documents, actually a confidential one, which was really cool. I'm going to pull it up right here just to.
And to clear things up while you're pulling that up too, Mickey, isn't this where people get the idea that there's two ledgers?
I don't want to go too far into that.
We don't have to get too deep into it, but I mean, isn't this where they get a little sidetracked? It's like RippleNet is where this is the banking system. All of this stuff is being sourced. It's where it's going to happen. And then there's the open XRP ledger itself, right?
Yes. So the XRP ledger has the built-in distributed exchange. That's what RippleNet is using. They're just abstracting it out because everything done on the ledger is public. And that was the whole issue where they had to pivot and build RippleNet up in the cloud and do a peer-to-peer server things. So it's basically just using Codius in the cloud. Think of it like that. It's the same asset, the same protocol, and the liquidity. There is internal liquidity there. So there could be, like if we're sending a payment to Nigeria, there's no crypto exchange in Nigeria. So all you need is a market maker to hold Nigerian, whatever they have, dollars, and XRP, and make a market between that and put it in the order book.
Right.
So this network then has all the banks on it too, who are going to have relationships for the fiat. And that's important. So they've put every piece of the puzzle in place in this network. And it's why it's taken so long. But the ODL volume we see on these crypto exchanges, we're not going to see an exchange in every corridor because we don't need one. RippleNet is the exchange.
There's the answer right there. RippleNet is the exchange. And furthermore, because they've been doing all this work, Mickey, it's allowed them to do, and we have to know, they've been doing an enormous amount of testing over all of this time that this has been taking place, even currently today. And wouldn't that be proper, because this would tell them exactly the amount of volume they're going to need, the amount of liquidity they'll need to satisfy the volume of payment flows. all of this information's been collected over the last several years now.
Absolutely. So they're running a lot of payments through fiat right now.
Right.
So they have their own fiat order books. They're just still integrating and developing the infrastructure for this. Now, with a digital asset like XRP, you need a custody solution. And we know they're using BitGo predominantly within RippleNet, but you don't have the full custody solution and key management and identity and everything that Polysign and standard custody are bringing to the table.
Sure.
So they're able to run simulations over and over again through RippleNet. They are very quiet about how much volume goes through RippleNet. We've heard Brad Gallinghouse mentioned it on the Pompliano podcast that in 1 month they did more than the whole amount of the year before in 2018. So we know volume is ramping up with the fiat. And then it's going to eventually, I believe they're waiting for the FATF regulations. I mean, I don't know if you want to go into that yet, but that's where I feel like that's like the convergence point where everything comes to a head.
Yeah, well, I think we can go into that at this point, but real quick, I want to make sure that you touch on the fact that Polysign and Standard Trust Company are going to be providing these custody solutions because they're a third generation tech. Can you talk about that for a second?
Yes, that is very interesting. So Polysign disclosed in their recent new website that it's a patented proprietary third generation private blockchain. So what does that mean? You know, this is one thing that we really haven't discussed, and it's something that should be discussed because it's huge in my opinion. Yeah. So why do we need another one if we have a public blockchain and permissionless? Well, because we have a public one that is open. I mean, it's permission with the validators, but those transactions that just go right over it are very public, and they can't really do that over it. So now with advances in cryptography, a third generation blockchain, you could have all these different market utilities come out of it. So your identity solution and KYC compliance could come out of it. You're able to run now smart contracts. You could run auctions out of those as well, which are pretty cool features. Yeah. And it's even possible, I mean, to speculate here, that you could pin the private blockchain of what they're creating to the XRP ledger, and they could possibly even break consensus up into 2 layers, which kind of makes sense because that's what David Schwartz said. It's going to be 2 layers. So one could be validating and the other could be signing and handling the governance. And that would play into it perfectly because, I mean, you have these, it's a very modular setup. And I think that's important to note where, like with Ethereum, everything's stuffed into it. Where now with Ripple realized, hey, we have this public blockchain. It's got a decentralized exchange in it. It's got pathfinding, but we're not going to put smart contracts in there. We'll abstract that to the higher layers so that they could be blockchain agnostic and ledger agnostic. So they built this massive network hosted in the cloud of RippleNet, and above that you have this governance, basically a federated custodian network, because that's where all your custodians, your asset managers, regulators are going to be.
So hold on, because you use a very important word, federated. You know, when something can come together, you know, usually through interoperability, right? Bringing many different layers or many different subsets together to act as one single unit. And that's what you're talking about here. You're talking about the ability to bring all of these things together.
Yes, yes. So you're able to, and they all work together. It creates a robust ecosystem that's flexible. So now we could have privacy enhanced, but also give the transparency then to the regulators.
Right.
And that's what Ripple's whole goal has been, is to automate the compliance as well. And this makes it very easy to do that. And secondly, these crypto exchanges, the way they operate now, is the number one biggest problem in crypto.
That's right.
So we recently, you and I looked into BitGo to see, hey, what's going to be the difference between, standard custody and BitGo? And to my surprise, BitGo is a monster. I mean, they're doing 20% of the Bitcoin transactions per day.
Yeah, that's enormous.
They have multi-sig wallets that are very advanced. And most of the top exchanges, if they're not already like a custodian, are using BitGo. Yeah. Ripple uses them, Galaxy Digital, Genesis, Circle, all the big names use BitGo for custody, right?
Yeah.
So now, why do we need Polysign to stand in custody if they're already doing all this custody, right?
Great question, yeah.
Because we're still not able to segregate the wallets on the exchanges. So when you open an account on an exchange, that exchange is more centralized than the traditional markets, and they're the custodian of the user's funds on the exchange. They're the counterparty for the buyer, counterparty for the seller. Yeah. They run the platform's transactions, the order book, and maintain it all. So it is not just, how we say, a single point of failure. This is multiple points of failure at once. So taking them off the exchange, BitGo can handle that with a multi-sig. But what happens on the exchange? Your XRP is lumped into either a cold wallet or a hot wallet. Yeah. With all the other people's XRP on the exchange.
Yep.
Absolutely. So there's the question of proof of reserves. Are these exchanges actually have all that XRP or all that Bitcoin?
Yeah.
That's a question. And that's what happened at Mt. Gox.
Exactly.
So
physically
we have
everything that's represented in everyone's wallet.
I think it's extremely contradicting that we have this whole big revolution from a lot of Bitcoin maximalists about how decentralized Bitcoin and this is, and then all the exchanges are the most centralized thing you could possibly have.
In fact, to back that up, we really have a great clip of it. I believe it's Mike Belch, isn't it?
Yes, CEO of BitGo, who is a trust custodian as well. And they've been in business since 2011, and they're a Ripple partner and RippleNet.
Let's spin this first clip from him that everybody can listen to on this. It's pretty profound. It backs up every single thing that you're talking about here. Let's hear this.
The market structure that we have in crypto today is ironically centralized, right? Here we have the most decentralized currency we've ever had, and yet we traded on the most centralized systems we've ever had. And while Coinbase has done a tremendous job, growing the ecosystem, Coinbase, like Gemini, like all of the other exchanges, they operate in a centralized manner where they are the exchange. They're the broker for the buyer. They're the broker for the seller. They're the custodian for the buyer, the custodian for the seller. They're the clearinghouse. They do everything all in one shop. And of course, we've seen fractional reserve. We saw that at Mt. Gox. They were likely hacked quite early, but nobody knew because it was all centralized within Mt. Gox. We've seen it at Quadriga CX.
Wow, that's a powerful statement. And it really goes to speak to, Micky, how early everything still is and about how, we're missing this market infrastructure that looks more like the traditional markets that keeps this kind of thing from happening.
Exactly. And to move to on-chain, I mean, you need these market infrastructures. And let's hammer into that, because that's what Ripple keeps saying they're building, market infrastructure. Now you got Polysign coming out saying we're building critical, mission-critical infrastructure.
Absolutely.
Now, what does mission-critical mean? I mean, that's like, it's got to be continuously going, and it's like you're in a mission, like And
Never
if
ending.
one thing goes, that's it. It can't go down. It has to continuously operate. So that's how they're creating this third generation blockchain that they spent the last 2 or 3 years designing and building. I mean, it really does fall into place with the secrecy of how they've been with it and these talks of the CBDCs coming out and all now. So if you're going to create a global custodian asset manager network where you're going to converge the traditional markets with these crypto exchanges, because these crypto exchanges are going to need to segregate their wallets and they're going to need to track where that user got their Bitcoin or XRP or Ethereum from. Now, are they going to all be able to do this on their own and comply? I don't think so.
Yeah, no, I see it as being a big issue too without this, without Polysign, Standard Trust getting into this thing and providing that as a solution. And more than likely that's going to end up being a plug and play for the banks. Now, let me go here for a second because, you know, there's another clip that I want to play from Mr. Mike Belsch, who is one wealth of knowledge, and you have grabbed some amazing clips here. If I could, I want to grab this one about market infrastructure and let this play for the audience really quickly. Here we go.
Or techniques that you foresee?
Yeah, so BitGo wants to make digital currencies and digital assets usable by everybody on the planet. And we think that that means that there's times when you want to hold it as an individual, and there's times you want to hold it, you know, with a fiduciary in some capacity. Maybe they're going to invest it for you. Maybe they're going to just secure it for you. But you want to be able to trust both parts. Now, until that latter camp can participate, I think the entire digital asset and Bitcoin space is held back. And what I'm talking about here is market infrastructure. So I'll use, I'm not sure if you're familiar with market infrastructure in the US in terms of equities through the SEC and FINRA, or if you're familiar with the futures and derivatives world with CFTC. But pretty much any established marketplace separates checks and balances across multiple parties to help keep investors and consumers safe. And the types of protections are you're protecting against front running, protecting against just straight fraud like Bernie Madoff. You're protecting against someone ripping you off and giving you a bad trade when there was a better execution somewhere else. It's called best execution. There's a whole bunch of protections that, you know, at least in spirit, some of these government regulators have been trying to fix.
And there you go right there. That really does hammer it out. It's the market infrastructure is what we are watching unfold. And that is really like the huge narrative of what I cover here on the channel, right? I mean, it's about all the things that are missing in this digital asset space that we see in the traditional markets. And Micky, I have to say, looking at CBDCs, looking at FinCEN about to drop new regulations on digital assets and custody, a halving from BTC coming up, the FATF regulations about to drop, and all the motion for custody to launch this year. Oh my goodness, what are we seeing?
Absolutely. I mean, they've been working behind the scenes here. Ripple's been doing this for a while. I mean, David Schwartz, they even in that video from last year, he says, we did. So the solution is in place. But you think about if they were going to launch CBDCs, there's going to be a lot of testing and there's going to be a lot of simulations before anything is done. And now this still leaves room for your R3s and your hyperledgers too.
Yeah.
Because they would still sit in that RippleNet layer, you know, because they're really not blockchains. They're just like distributed databases with smart contracts. They do not have a golden source of truth that's going to be there forever. It just goes to a notary and then it stays with them. It's not on a continuous public blockchain. So you always need that XRP ledger at the bottom. Like that is the infrastructure for settlement. You have RippleNet is the exchange and payment system. That's the market infrastructure for that. For all these digital CBDCs, how are they going to trade them? You know, what are they going to use? Is traditional markets going to be able to have wallets and get all this up and running? Are they going to be able to put market infrastructure as slow as they move?
Oh,
no.
No way.
So with everything that they're building, it's purposely being built for what's coming in the near future.
That's right.
We might not see it right now. Like, why isn't ODL ramping up and this and that? But the market infrastructure being built is the most important thing for us as XRP holders. Because if they weren't building market infrastructure and it was just, oh, this partner doing this, and yeah, we're going to put a network together and we sent a few payments. No, we built a global value exchange. This is the infrastructure for the Internet of Value.
Yes, absolutely. And
This is
go
the
ahead.
institutional side. So I look at it like this. You have RippleNet, Polysign, everything they're doing over there is the foundation for the institutional enterprise Internet of Value. Then you got the other side where you have Xspring, Interledger with the web payments, and Logos is doing the DeFi platform, and that's really going to be interesting. And then you have the gaming platform I looked into. Do you know that Forte has 15 different partners already on their gaming platform?
Wow. No, I did not know that.
Yeah. And they're creating an open ecosystem for gaming to where those assets will be able to trade it on like a marketplace there, which is pretty cool.
Yeah.
You know? So you see all these different infrastructures being built, open sourcing, institutional, custodies. They're hitting it from every angle now. So it's only a matter of time before the veil comes off and we see exactly what was being built.
Absolutely. I completely agree. Well said. And, you know, to put it in another way for people too, is that we always hear these different level of players in this space and in government and in banking, finance, talk about a level playing field, a level playing field, a level playing field. And I think it's important to remember that market infrastructure is the field. And we don't have a level anything or a game to play a game on if we don't have the field. And this is what's happening right now. And we are so not privy, you know, unless we're hooked up with somebody like Mickey B and the deep dive room and all these guys that do all of this work and are able to find this stuff to really show us, you know, all in the community what exactly is going on behind the scenes. And it's market infrastructure building. That's what's happening and has been happening. And it's getting pretty exciting now with the FATF getting ready to drop their deadline in June. We're talking 2 months, Mickey.
Absolutely. Now, how many other who else out there is building that type of market infrastructure?
What a statement.
Now look at what SBI's been building over there for the past 3 years, with integrating their whole synergies with their FX platform, their liquidity, their securities. That's another thing, is we're going to be tokenizing assets. And you and I have discussed this privately, but I think we should talk about this, and how we're in this whole debt and how you're going to pull out value, right?
Yep.
Now, we start digitizing and tokenized securities. You can't do that unless there's a market infrastructure then to go trade those, right?
Absolutely.
And they're going to be global now. So traditional, we're trying to merge, like what Miguel Villas said, merge the crypto markets with traditional, not replicate the traditional markets.
Right.
But we need to get away from this. The exchanges, the crypto exchanges that are there now are so centralized because Bitcoin is so slow to settle or process. Nothing could be built on it because it's a dinosaur. I mean, I'm not saying it's going away, but it's holding the market back.
Yeah. So to that point, let me play this other clip from Mike Belch, because you make a nice segue to this. Where he talks
It's a good one.
Oh, it's a good one. And let's hear what he says here.
Time where there's two competing needs. One is regulators that think they want to hold all the keys. And the second one is users that first and foremost want regulatory compliance, but also want to make sure that they're protected against jurisdictional risk. I think we're getting there. I think we're going to actually accomplish both. What we do want long-term is a federated network of vaults across multiple jurisdictions such that your money is protected against any single jurisdictional failure. Yeah.
Whoa, Mickey, he just said it.
You gotta repeat. You gotta play that again.
Yeah, I'm gonna play it again because he just said it. It's 30 seconds of hotness.
Time where there's
And
two
it does.
competing
Now look at that picture while he talks.
regulators that think they want to hold all the keys, and the second one is regulators that first and foremost want regulatory compliance, but also want to make sure that they're protected against jurisdictional risk. I think we're getting there. I think we're going to actually accomplish both. What we do want long-term is a federated network of vaults across multiple jurisdictions such that your money is protected against any single jurisdictional failure.
He just dropped some breadcrumbs right there.
Yes,
Because
he
Bitco's
did.
not able to do a federated network on their own.
Exactly.
And what do you need to do a federated network of consensus like that?
Everybody together. You got to have all these different actors and layers. All these things have to work together as one single unit, basically.
Yep. And if you were going to create a like the fact that they're making it like known to be proprietary and private, that just screams to me like highest level of financial institutions, which is these custodians who are like your BlackRocks, your BNY Mellons, your State Streets. Those are the custodians. Then you have your asset managers. I know BlackRock, a lot of them do both. You know, they'll have the custodian, the asset manager side. And then you have your governments, your central banks, right?
Yeah.
They're going to need to interface with, I mean, this gives the global, you know, if you're going to create something like that, it's pretty obvious to me. I mean, we don't have details to know for sure, but I think it has to do with the central banks. They're meeting with 50 central banks in the past 5 years. They're building a global value exchange here. And now you're going to build a third generation private blockchain. I mean, just like perfectly set up for the central banks to then send in between each other and then have visibility into those transactions.
Exactly. And,
You know, and
if
it's
you
like
saw the FSB,
last.
the Financial Stability Board from the G20, Mickey,
Mhm.
make their point come out and recommend banning private stable coins, which is a huge flag that CBDCs are about to
Huge.
hit the market in a big way.
Absolutely. And, you know, I didn't bring it up before, but I think it needs to be known. That standard custody and trust company, their pending license for the New York State Financial Department's license is they'll be a bank. And they'll be able to do everything a bank could do, except, loan on deposits and fractional lend that you can't do. But they'll also be able to operate an exchange. Now, what is RippleNet? An exchange. Ripple can't do that. They're a software company. But do you know who can? A trust custodian can.
Ooh.
And it also brings that oversight where, if the regulators want to see where every transaction comes from, it could get signed by Polysign. I mean, they just tap right into the network. I mean, it could be automated. And I think a lot of this stuff is going to happen autonomously. I mean, I know that sounds out there, but Ripple talked about this 2013, 2014 to just get to the point where you're going to have autonomous smart contracts just running.
It makes sense. I mean, look, if we're going, I think one of the biggest things about all of this, besides the obvious, we know we have to have security, we know we have to have scalability, interoperability,
Mm-hmm.
but the efficiency of a system is so important because it's going to bring the velocity of money to a degree that the world has never experienced before, which is really going to allow the larger banks of the world to start to have access to their nostro vostros or dormant accounts that it may not completely be a nostro vostro, but get access to this dormant capital that they, in other words, in the history of mankind up until now, would absolutely have to have in order to do business on a daily basis. This is a huge part of the equation we don't talk about a lot, but it is key for us. And we are in, obviously, it don't take a rocket science to know we're in the middle of an economic depression, and everybody can blame it on whatever they want. It's here. and how we get out of it and how long a time period it takes us to get out of it, I think greatly weighs on the velocity of money and getting these market infrastructure systems in place. I really do.
Absolutely. It really does. Because if you're going to move to a digital world, and this is what, they're all talking about, you need the infrastructure there. And it's not just exchanging currencies either. I mean, these banks on RippleNet and asset managers, they're building business models and their own platforms and their own services and value-added services and apps for their customers and other businesses to use. So this is a marketplace that's being built like within, say, RippleNet for the financial institutions that's going to drive revenue and drive that velocity of money, because you'll be able to send money cross borders instantly.
Yes.
They won't be able to tie up a capital. There won't be 3-day settlement times. It'll be more efficient. And then the compliance cost is the other thing. Banks spend so much money on compliance. If they could automate that with AI and machine learning and digital identities, KYC in there, they have already done that because that's the Bank of England tested. It just makes it, it pushes us into that digital age, because we can't just say, oh, we're making a CBDC and we're in the digital age. You need all the other surrounding market utilities and value-added services and the underlying infrastructure.
And you absolutely, you make a great point. If we bring this boots to ground, Mickey, and we look at the current situation, let's just say domestically here in the States, right? We've had an economic collapse, a deliberate shutdown of the economy due to a pandemic, and we all know the drill. But there's been stimulus checks go out. I certainly haven't got mine, and I know many, many other people that haven't got theirs.
Me either.
You either. So there you go. So even to that point. So I look at like, okay, we're boots on the ground. They didn't take advantage of that system or moving to that system at this time. Obviously, it's not quite ready, or you think they would take advantage of it, at least.
Well, I think there's a design challenge too, right?
Well, there is, right? So where's this gap, Mickey? Where's this gap between where we are today, the infrastructure that we so much talk about that's being built? When does this bridge between today and where they've been going or building for tomorrow, where does this bridge actually take place? Is it the digital dollar, digital wallet that's on the floor of the Senate right now? Where is it?
The China CBDC is going to kick them into. You think Libra was a wake-up call? Well, this is a shots fired.
Yeah.
Because what that, I think, is going to really hit home, like with Trump, and I think they're working on it hard right now. I think they've been for a while. The question is the Treasury going to do this, or is this going to be the Fed?
Well,
right?
I think
that's with domestic, we're in a unique situation here because we're the reserve currency. We've just created another couple $1 trillion. So what do you make, a digital version of that? Or we have this opportunity now to make another digital dollar or something else. So this has had to be debated and discussed. And now you look at it from like where Ripple was. They were with the Fed for 3 years working with the task force. They were part of the executive order, right?
Yep.
That the Treasury wrote. Now that was to revamp the financial system. And that's kind of like what you were talking about. Now, who wrote that? The guy who's on the board of directors at Ripple from the Treasury Department.
Craig Phillips.
So,
yeah.
Ripple has so many ties to the Treasury Department. The Susan Freedom lady, who is the assistant of the Harbert, who is the CFTC chairman now.
Yeah.
Craig Phillips on the board. What's the other guy's name? Michael Starr. He's a special advisor. He's from the Treasury Department. Brad Garlinghouse and David Schwartz went to go, excuse me, meet with the Treasury Department, right?
Yeah.
That meeting. So the Mnuchin saying, "Oh, payment innovations from like the MoneyGram," in his press conference. So there's obviously a direct tie here to the Treasury. I think that's where we're going to see the a possible, like you said, designation to where, XRP Ledger is more of not a cryptocurrency, it's a payment network and value exchange, it's like a public utility. It doesn't fit cleanly into just a cryptocurrency,
Exactly.
And it's very possible that, it gets designated in a different way. It's going to be very interesting. But I think the China CBDC is so powerful because they came out and said, we're going to use this in international cross-border payments to gain influence over the US dollar and push the renminbi out to other countries. So that's like shots fired right at the United States and Europe. Now, all these other CBDCs you've heard talked about, never have any of the other central banks ever come out and said, yeah, we're going to make a CBDC so we could gain influence in the rest of the world in Asia and Asia. No, they don't even talk about cross-border.
Exactly.
So the fact that China did this way out in front of all the other central banks, just came out, abruptly did it. They got their biggest banks on board, their WeChats, Alipays. And one interesting tidbit about the China CBDC, they added a level of privacy into the consumer layer of it. So Alipay and WeChats are not going to have full access to all the data anymore. But the government will, of course. But that's interesting because it sets a precedent for all the other CBDCs now. If China's doing that, they're all going to have to do it.
They're all going to have to do it. You know that they will do it too. You know that. And, to your point about that, just for people who don't know, the CBDC starting in May, a portion of that digital currency, central bank currency, will be given to China's state employees to cover their transportation costs for their transportation to and from work as like a test and getting it implemented in the part of their check and their pay. And then there was like 19 or 20 American companies in China that will and have begun testing the CBDC for China right now.
Yep, and it's built on DLT. The bottom layer where the consumer interfaces with the, your WeChats and those companies that you said, is built on blockchain.
Yeah,
and DLT technology. It's massive size, they said. Like it's kind of insane. If you looked at the architecture, I don't have one now, but the architecture picture of it, it's just very complex. I mean, it's setting precedent. What are you going to do now? One of the countries will come out, yeah, we made $1, it's digital. You put it in the same Bank of America digital wallet you have now. I don't know. You need to now match that if you're the U.S. You can't just go, oh, yeah, we're going to do a digital dollar. And it could be the reason why it was removed, because they didn't just want to put out some like half-assed digital dollar. They're like, if we're going to do this, we're going to do it right.
Yeah. Yeah. And we're talking about main companies, the huge name companies, Starbucks and McDonald's.
Wow. I didn't know that.
I mean, huge companies. So this is really, really, hitting the ground running. This gets exciting. All of this on the heels of, again, the FATF in June, Mickey. Now, we've pretty much covered everything. You want to start?
What if oil starts? What if China wants to start trading their oil in the CBDC with Saudi Arabia, and they just incentivize them by giving them some of the CBDC?
I don't think it'll be long. We're going to start to see a scenario like that, and that's why, to your point about what happens with the Treasury here in the States, I think the Treasury considers bringing out a new currency here on top of the dollar. I really do. I know it sounds futuristic. Maybe it doesn't happen, but I think it could. I think it could really happen.
I think they're in deep debate, or they have been in the recent past, of how to do this. But I think the only real answer that could push back a China CBDC threat like that, the U.S. dollar, in its current form, no way in hell could do anything to try to compete in that way. Secondly, a rollout it would be very complicated for the U.S. to do because we have so many dollars across the world. XRP is the ideal choice because it's a neutral, public, digital asset that you don't even have to hold to use. And now those countries that are caught between like, oh, China's pushing this on us, in the Asian region and Middle East, then could be like, oh, we're going to use the neutral asset. So it is perfect setup.
Yeah, this is how you diffuse the monetary bomb before it becomes a bomb, right? You know what I mean? It's like they're not going to allow the, Chinese government to take over this digital currency market with a central bank digital currency, because I believe this will incentivize, like you just said, the use of XRP as a neutral reference point, which will let the gas right out of that balloon, right? It'll just let the air right out of that balloon. Like, yeah, it stays at home with you.
And it's going to come from Japan.
That's right. Yeah.
Because they're going to be the first. We've heard whispers. I don't have the video up now, but there's some good information showing that they're very close to their CBDC or whatever, J-Coin or whatever they're doing. They've been building market infrastructure for the past few years, Japan, and they're right next to China. So I think we're going to see them as number 2.
Yeah, it's going to be very interesting to watch all of this happen. And like I said, I think that FATF guidelines are a big deal. We got the Bitcoin halving coming up in about 12 or 13 days now, somewhere in that neighborhood, maybe a little more. But this gets ever so closely to a new watermark for us in this digital asset space. Mickey, you want a final thought this thing?
Yeah, final thought is that market infrastructure is being built on all fronts by the Ripple ecosystem, down to the Bread wallet doing market infrastructure for wallets, to Xspring building the Interledger and the open money platform, to gaming, to web payment standards, to custody infrastructure, to value exchange infrastructure, to public ledger infrastructure. It's all being built for this ecosystem to thrive, because once it gets going, the network effects are going to they're going to be monumental once it does, because network effects will just swallow all the value. I think that's why Ripple's kept their head down during this whole turmoil, because they know once it gets going, it's just going to just pop off.
I completely agree. And I feel like, just to re-highlight it again, because you said it so well, there's no need to I echo the comments that you just made, because I think they're spot on. I think the things to look out for now are the CBDCs, FinCEN, having on Bitcoin. Will we see restrictions from FinCEN that deal with coins that have mining? That's one of the big things I'm looking for to come out. The FATF guidelines, the deadline in 2 months now, a little under. And what are the effects of that in comparison to competition of the exchanges and the banks being equal vote at that point? So it is very exciting. And again, it does come down to market infrastructure, market infrastructure, market infrastructure. That's what we watch here on this channel. This is what you've brought here to us today, Mickey, an enormous amount of information that shows us that no matter what's happening in the world with the economic collapse that's going on, this is still happening. This is still growing, and it's just going at a breakneck pace. It's getting very exciting, Mickey.
It really is. I mean, you're so right about the FATF. That's the turning point when this market's going to shift.
Yeah, man, I think so. I think so.
Thank you for having me. It's a great discussion.
Mickey,
I hope everyone enjoyed. If you have questions, I hope you asked the questions already. But feel free to DM me on Twitter or Telegram.
Absolutely, Mickey. I can't wait for this to come out. We're going to have such a good time in the chat while we're talking to people about comments and questions on this. As always, my friend, you are amazing. Thank you so much for all your hard work, and we will see you on Showtime. When are we going to air this thing? Tuesday or Thursday night? What do you want to do?
Let's do Tuesday.
Doing it. Tuesday night. This is happening. All right, man. Very good, Mickey. Take care of yourself. We will talk offline, my friend.
Thanks, Brad. Have a good night.
You take care.